Good morning, everyone. Can you hear me okay? So I'm on broadcasting this also to YouTube and Facebook, but can you hear me okay? So I'm broadcasting this to Facebook and YouTube, so I hope you can hear me okay. Like all we did was got cover shorts today and then just stayed with our profits. Now, what do you do now? Well, the biggest thing is what wins? Does the bond market having this massive rally win, or does the instability of this whole SIVB bank thing? So, if you didn't know, the SIVB bank thing, the stock went from like 400 to now looking for sale. Yeah, they're looking for a sale. So, keep that in mind in there. And like I said, all I am is I watch correlations. So, as you see in here, what made the markets go down? The banks. So, when JP Morgan started going nuts, that sort of put the floor on the SPX, no doubt about it, because yesterday the banks led the markets down. So, when the banks started to rally, that helped. And the bonds being up 3 points helps. And I'll show you why. So here you go. So this is the ES on the left. And that's where it was right here, the beginning of the year. And I've obsessed about that, talking about that the bonds needed to follow. They needed to follow the bonds. Well, guess what? The bond market went to unchanged for the year right here. And the ES went unchanged for the year. Almost close enough. So now the bond market is all the way up here. And so that's okay if this is here. To me, this is like the bonds leading the market now. So if I go into here, I look at this and I go, that's the beginning of the year. That's the beginning of the year. Now, this is where it was right here, Monday, February 6th. So where's this? Where's February 6th? Right there. So just keep that in mind with the bond market. Now, I thought this went up too far in the first place. So to me, that 4,000 level is the big deal. But I'm telling you right now, this is all a flight to quality because everybody is scared about SIVB. Let me show you a nasty chart. There's your SIVB. There you go. It was 760. So I shorted it. Yeah, I have a ponytail and I shorted it at the exact top. I just want you to know that. I shorted it at the exact top, like 10,000 shares. No, 20,000 shares. That's the ticket. No, honestly, I've never traded this stock. So the whole idea in here is what else am I going to do? Well, now that the ES has hit where I expected it to go relative to the bond market, now I got to look to buy ES stocks. So which ES stocks would I buy? I would buy the ones that are really at support. And so just keep that in mind in here. Do you buy Home Depot? I don't know about that. I'm going to put it on different time frames. And that doesn't mean chasing strength. And I'll show you what I mean. So the ES now has a big reversal, no doubt about it. The problem is that on different time frames, it's now overbought at resistance. So it actually opened here this morning. We were fading it. So now it's overbought at resistance. Hourly chart, overbought at resistance. Just keep that in mind before you get too excited about just buying the world here. So it takes time for it to work off a lot of damage. So if it could get over that, sure, it could get back to these levels. but that's a big if right there. That's a big if. So that's what I'm watching right now. And I'm telling you, when I look at anything, let me show you. When I look at anything when it comes to any kind of squeezes, just keep in mind that I'm combining it with other stuff. So when you look at an hourly squeeze, it was right here, but there was also one right here. So you would have bought the top. Right there, you would have bought the top. So if the squeeze comes in handy, great for scans, no doubt. But I would combine it with 3 reasons. I would definitely combine it with 3 reasons. So even though this looked like it was going to squeeze to the upside, all the banks were getting destroyed. And that was a good tell. I'm talking about yesterday. You can't even see it on there. There you go. That was a good tell not to believe it. So definitely want more than one reason. So, just keep that in mind. So that's the way I'm looking at it. Like I said, 15-minute charts are overbought, and I combine it with other things. So if I see a bull flag, like I said, if it works for you, great. So just keep doing it. But for me, what I'm seeing is now you're overbought at resistance. And so there is no way in heck I'm chasing it here. So just keep that in mind. So what I'm going to do is I'm going to look for the stocks that are near support. So, and those are the ones I want to play after this works off any kind of overbought. So I'm all about probabilities. So if I see this overbought and this overbought, sure, it could get all the way to here. And this MACD is an imperfect science, no doubt about it. But I just can't mess around. Now you might say, what the heck is that 39.70? Well, TradingView has rolled to the June futures instead of the March. So that's why it looks like that. So there's a big old premium between the ES and the cash. So it's about 35 points. Just keep that in mind. So that's the way I look at it. So what else am I going to do? Probability. So once this works off the overbought, I'm going to look for what won't go down and what has looked pretty good on a daily chart. It's really tough for me to buy Disney, even though we were in Disney. I put it up here. I really want to buy stocks. See, and there it is, already going down. You just can't trust overbought at resistance. I'm telling you. There you go. If you want to buy when it's overbought at resistance, it's all probability. That's how I do. It's all probability. But I'm going to look for stocks that have formed bottoms. So what stocks look the best? Well, believe it or not, Home Depot is trying to form a bottom on an hourly chart. On a daily, not so much. I want stocks that retained a bullish structure. So they're at least over the 200, or at the minimum, or at the 50. So the way I do it is I just take my main list, and let me share that. My main list changes all the time. So take my main list and I'll share that if I can figure out. And like I said, these are the most liquid stocks, and that's the way I do it. And then I add those to scans. There, that's my main list. Right there. Let me put that in here. Let's see. Yeah, I had to put it on the stream part. But like I said, everything I do is probability. So not everything, but I like to have 3 reasons to do something. So Bitcoin came back. We were short a bunch of Bitcoin, but we were looking for that 20,000 level. But the way I'm doing it now is I took my main list, and if I'm bullish, now I'm not saying I'm that bullish, but let's just say I'm bullish, then I'll go and do a scan like this. I want to take the stocks that stayed in my main list over the 50. That's all I want, or over the 200. But let's just see if there are any over the 50. Now, you don't have to do it this way. You could use FinViz, and I'll show you that in a second. There, so I'm going to take my main list. So these are the ones I want to buy on dips. So I'm going to take off all the stuff I don't need. I don't need that. I don't need that. I'm just looking for the ones over the 50 in my main list. And that doesn't mean to buy them today. Because like I said, we're overbought. But there you go, like 0.% over it. And then I scan. And those are the stocks that have retained their bullish stuff. So Salesforce, let's look at it. So all of these, 33 stocks within my list. Let's look at CRM. Yeah, so that got nailed while everything else got nailed. But in the grand scheme, this is still staying in a bull market. It got a little too far from everything. But if I'm going to buy anything, it's going to be the ones that have the best acting charts. So you could take AI, but that got killed last week. You can take the mighty Apple. But the problem with a lot of these, you have to have that kind of thing. You don't want to see like a big red candle and then it doing that. That looks better. Now, the problem is all of these are going to bump up against resistance and be overbought. So I have to see how they work off the overbought. There's no way I'm buying Apple right now. So, and like I said, overall markets, there you go. I'm telling you, probabilities, 15-minute overbought, and you see what's going on. There you go. 15-minute overbought at resistance. And what happened? It sold off. So I'll put it on a 15 and a 2. There. So there's your resistance, and there's your overbought. Doesn't mean it won't work later, but I have to see this MACD like recycle near 0. So that's one reason. But I also have to see, as it's working off the overbought, I have to see the advanced decline not go lower. So that's a big deal. So I want to see it not go lower. And that's the kind of stuff I'm watching in here. At the moment, as this is working off the overbought, is there anything in here that just is acting like Chuck Norris and just not going down and just muscling its way higher? Well, let's look. Just a stock you can't beat down. Well, the tech stocks are acting great. So that's where I'd probably go. The software / service, like the Splunks and the ServiceNow, yeah, I wanted to do MongoDB and I didn't do it. And I still think if we have another leg up, all of these that have this little W are the way to go. But you would love to see these test the breakout. And that's what I'm doing right now, seeing how they're testing the breakout. And that's what I'm doing. So, do I want to play these? Well, the first thing is if I'm looking to buy the broad market, the things that brought it up, like the Nvidias and the banks, I need them to stay up. So these color coded, as you see, there you go on the downside. You just got to respect that overbought in a at resistance. So you just have to have three reasons. So why did the markets go up? They went up because the banks were going up. So what happened? The banks are now under these ATR trailing stops. So if you want to know, I can't share this screen, it's proprietary, but you could just put the ATR trailing stop up there. And all this is to keep you in the trend and to keep you from going opposite the trend. So now that it's under it, it turned red. That I can't show you. I can show you this, that. So those are my settings. But I hope the ES you stayed out because it saved you about 8 points. So let me go and show you this. So let me share this screen. So let me share my settings. Now you can get this on TradingView. It's volatility stop. That's one way. The other is the person that invented it is Sylvian Vervoot. So you could just go to ATR trailing stop, Sylvian Vervoot, and it'll fill in on TradingView if you go to indicators. So let me share this with you. Well, that's what I'm talking about right now, Renda. I'm talking about, are there some stocks that are retaining their bullish structure? And I'm trying to scan through those, and that's why I was showing that scan, trying to retain that bullish structure. So at the moment, when everything's overbought, I'm having a tough time. On the other hand, and let me put this on, I don't know if I can add a graphic over here, but I'll try. No, won't let me. But that's why I'm doing these scans in the first place. So, like I said, I hope I saved your butt in the ES. So, like I said, you got to combine it with things. And you were overbought at resistance. That was a beauty. Look at that. Overbought at resistance. Yes. So that's only about 20 points. So that's pretty cool. And as you see, the things that led the market up have finally started crossing. So just keep that in mind. And that's why the markets went back down. There's a lot of instability shown by gold and bonds because of flight to quality. So the biggest deal in here is you have to see what won't go down or what has been in a big old bull market to answer your question. So just keep that in mind in there. So overbought, I'm using the MACD. So you can use any kind of oscillator. But the deal is it's all about percentages. And when something's overbought at big old resistance, you don't have to short, but you sure as heck don't buy. I mean, at least I don't. So I'm using this. Let me share that with you. There's my MACD. So that I can share also. And like I said, you don't have to use this one. So you can use, RSI, whatever works for you. I've just found that this works pretty darn well. And like I said, overbought is a relative term. But all I'm showing you is that things are overbought at resistance. They can stay overbought, don't get me wrong. They stayed overbought here, but it didn't work either. That's because there's a big resistance in this area. And with the bonds up this much and gold up this much, there's a lot of instability because of that SIVB. Now, in spite of this, yeah, the market's acting okay, but I would look for the stocks that just have been in a big old bull market. And that's why that scan that I showed you earlier was a beauty. So just keep that in mind. That's the way I'm looking at it. So a good question in here is, what group has been the strongest? So somebody on the free chat just posted it. Some of the chips. How do they look on daily charts? They look great. You're dead right. So these have retained their bullish structure. So do you buy AMD right now? I hate to see that it's overbought and that this is still unstable. But that group has acted great, all that AI stuff. So whether it's NVIDIA, and here's another one. If you're going to buy something intraday, you try to buy the ones that acted the best. Yeah, it just sold off 3 points, but look at that bull flag. So, and that W. So you're right. So in there. So just keep that in mind in there. That's what I'm watching. And like I said, lots of instability, lots of stuff that hasn't come out yet. I don't look at percentages. Like I said, I just look on a 15 and an hourly when I'm day trading, and I'll also look at a 5 minute, seeing if there are any negative divergences and stuff. But the biggest I use day trading is going to be a 15 minute. So I'll use usually a 15 and a 5, and it's not percentage wise on how much it's above it or not. It's if it's above it at resistance, I just back away. So now if it's above it and it forms a bull flag, well, that's a whole different story. But that's what I mean in there. And I also like, if I'm going to buy, if it's overbought over a lot of longer term indexes, that's fine. But on an hourly chart, it still doesn't look right. I mean, the ES. So, I mean, that's the way I look at it in here. And the problem with some of these stocks, I just want to show you, it doesn't mean they can't work. But this was a mistake I made. So let's say you like Disney. You know, it just doesn't look good on a chart, except that it filled a gap. And it's that support. Do you have 3 reasons? No. Did I lose money on it? Yes. So Citigroup this morning. Did we make money? Yeah, it wouldn't go down. All we did in there is we bought right here, right there. Unfortunately, we sold right here, but right here, 957, JP Morgan was already going up. Look at that. It was already up for the day while Citigroup was down a point. I'm really into a lot of correlations. And when I see JP Morgan up that much, I don't pay as much attention to like a 1 minute MACD. Now, what did that do on a 15 minute? Man, it doesn't move as much as on a 15 minute as like the ES, because remember, this starts just at 9:30. It's only been 2 hours. But there you go. It got overbought, and a shorter term chart. Yeah, that's what happened. It was overbought, did that, and then it had its second win. So you had a chance right at this candle. So pin on our chart pattern side is really into these candles. So basically, we like the big red candles and the big green candles. So when a green candle took back half of a red of a big one, I'm not talking about every little candle. I hate trading every little candle. I just look at the biggies. So when it took back half, you could buy it there, and then your stop is down at these wicks or just under it. So, I mean, as you see, it worked. And then you had a doji. I love looking at dojis. So I only look at really 3 patterns. I look at like big green candle and red candles, sort of like a dark cloud cover, which is where they take back half, or a bullish or bearish engulfing where it takes back all, but big candles. So, and indecision candles and the follow through the next tick, like there. And believe it or not, there. So I just want to show you on, those are the candles I look at. What do you do now with the broad markets? Well, let me go back and show you my bigger charts. First thing you're going to notice is the ATR trailing stop. So what's everybody keen off of? Why'd it go up? Because they were keen off the banks. So when the regional banks broke their ATR trailing stop, yep, these all went down. When JP Morgan broke the ATR trailing stop, they all went down. So today is the day to key off the banks, not the bonds, the banks. Now, like I said, today is going to be real interesting because on the one hand, you still have instability with the bonds and the gold up this much. I mean, big old instability, but you really have 2 other things. One is the ATR trailing stop, and one is the advanced decline refuse to go back up, and watching all the banks. So the way I'm looking at it is, if these get back over it, sure, maybe I'll look at cheap calls. So if these rally by having a weak rally, then I'm going to sit and look for cheap puts. So like I said, here you go. I'll show you the NASDAQ. There. So what was the NASDAQ on a 15-minute chart? Real overbought right at resistance. So that doesn't mean you can't stay in it. I would then go a short-term chart and get myself out right here. Because who knows? Maybe it stays overbought. But if I see it overbought on a 15, I'm going to go to a shorter term chart to get myself out because the odds are it's going down. So that saves you, how much is that? 47 plus 12. So 59 points. Saves you 59 points. Now, if this gets oversold and this starts, then I'll use this to look for an entry point. That's the mini. So sorry about that. Same difference. But when I see it overbought right here, at resistance, then I go to a 1 or 2 minute chart to get myself out if I'm being stubborn and want to be long. Now, if it goes back above it when it's oversold, that's a whole different situation. So just keep that in mind. And I can't impress enough that I try to use 3 reasons for stuff. And I've just found the 3 reasons, works. And, in here. So you first saw the thing that made it go up, the banks crossing. Really, the first thing is the 15-minute chart getting overbought. So usually I use 3 reasons to get into something and only 1 to get out. So when if I was long and I saw this, I'd be out. Now, how about if you wanted to short? Yeah, you were overbought at a resistance. The 1 minute chart was crossing on the ES. Sure, you could have shorted. That was 20 points. So you can play them both ways. Now, and answer your question of do you want to buy or something longer term? I think you still have to take the stocks on my main list that have retained somewhat of a bullish structure. That doesn't mean you buy when the whole market's overbought, but it's giving you the idea that if the markets do turn around, you want to go for the leaders. So even though you might say, I want to take the laggards, in the long run, I've seen it's the leaders that if they're leading now, they'll lead later. You know, so just keep that in mind. Now, the other thing, I don't know how to post things on the live feed of posting images. You know, I would love to try to post an image of this just so you have it. So you have that and you have that. But I'm trying to figure how to link them. So if I could figure it out before the end of this, I'll do it. I went to graphics and that didn't work. And so I don't know how to do it. So I tried to put it on chat and it made just a big old thing, so I couldn't do it. So just to let you know. Now what do I do? Right now what I'm doing is just watching. So the one thing I am watching is the Russell. So the Russell is actually near its lows. That gets me really nervous about buying anything today. So there's the Russell right there. I hope you could see that. I'm going to make it with a big old arrow right there. So where's the NASDAQ in relation to the Russell? You don't want to know. It's up here. So it's real scary. On the other hand, the ES is down here. So if I'm going to buy anything, even though I like AMD, I'd rather buy the big stocks that still retain a bullish structure. So it's not the NASDAQ I want to buy, just so you know. Now, there are a couple of other creative ideas. I'm not doing them now, but I just want to show you creative ideas. Sorry if I stuttered, but I had a chance and I didn't do it. Let's say the markets do crash. These have 27.5 puts. I'm not doing it. I'm just showing you something I tried to do and I canceled. But if the whole market crashes, the EWG, the German ETF, has stayed up like a champ. So if the markets crash at the end of the day, these stupid things were a penny right here. But they don't have a lot of open interest. They were a penny right here. They're at the money. So if the market crashes, yeah, those would be a great risk reward. But the problem is they're hard to buy. So I'm not buying them. I'm not putting in an order. I'm just telling you the kind of stuff that's possible today, whether it's the 92 puts in Google, whether it's the 150 calls in Apple. These are all things we're going to be evaluating the last couple of hours. So just want to let you know that's what we're doing. So like I said, overbought. Just look at the MACD against resistance. That's all. And AMD, like I mentioned, is long term, it looks pretty good. But when you see the bonds up this much and gold up this much, there's still a lot of instability. So I'm not staying long anything overnight. Also, you have the CPI on Tuesday. You have a lot of instability because of some of the regional banks. As you see, this just sold off 5%. So I'm not buying anything. And like I said, metric for overbought, it's all about probability. So if the ES is, it's not percentage. It's not percentage. It's that it's overbought at resistance. That's all that matters. So it could have been overbought here, but you didn't have any kind of reversal candle. So that's all I'm doing. It's overbought at resistance. That's all. And then when I see that, I'll go to a shorter term chart to initiate a short. Now where's the support? The problem is the instability. Most people that have traded the last 10 years haven't seen any bank failures or anything. The ES support is right here. That's the ES support, but that's a zone. I mean, that's a 100-point zone. That's a little rough. The only way that I'm buying the ES longer term is if I see an hourly chart have some kind of like bull flag or something. As you see, it still doesn't look so hot. So just keep that in mind. That's what I'm looking at. So this is my relative support. But the problem is then you have other things that you have to watch to see if they undercut it. So the Russell's at it also. But as you see, the Russell on the right failed miserably. So I don't know where the support is. So just keep that in mind. Yeah, just to let you know, yeah, it was closed today by regulators, SIVB. Now, what's scary about that is if you're and that's one reason you're going down, but isn't it amazing it coincides with overbought? That's an amazing thing. So, like I said, instability, bonds up to 226, gold up 27. That's instability. So just keep that in mind. Very rare to see the bonds up this much. So there's a lot of tentacles from that bank that was shut down. So thanks for putting that in there. A lot of tentacles. And what I mean by that is now you have all these venture capital companies that can't get their money out. How are they going to work on their products? So you don't know where the tentacles are. And that's why usually these get sold at the end of the day on a Friday, because you don't want to be near anything over the weekend. So, I mean, that's theoretically what happens. And like I said, there have been so many for a year that have been trying to buy the dips in the broad market. And you got to watch the bond market. So right now, the bond market's still in the dumps, really. But you got to watch that bond market. And I know everybody's talked about buying, but once the bonds rallied, yeah, you got a good pop in the ES. But this time's different because it has to do with instability. And that's one reason the Russell's down. That's just the way it is. So very scary. And you're seeing things like this. Let me show you something pretty interesting. So you're seeing CRSP. That's a developmental stage doing CRISPR technology that keeps getting funding. Yeah, so you see the ones that don't have sales have to keep issuing stock. And a lot of times those are the private equity firms that participate other than, big investment firms. And now they might not be able to buy it. So the ones that don't have sales, that have like astronomical price to sales or no sales are the ones getting hit the most. That's why the Russell that has a lot more high price to sales is getting killed because it has so many growth companies in it. It's real dangerous. And so I just don't think you buy anything today. Like you see, I hope I saved you in there. And like I said, I would love to look at a short-term support, but when you have instability, you can't worry about short-term support. You have to look for big old reversal candles. So let me go back to 2018, and I'll show you on how many people got really hit by, let me see if I have it on here. I'll do a weekly. All right, like this. See the big old reversal candle? So many didn't buy here because they're like, it was just 2,200. Why would I buy here? On a big old sell-off, especially this type, you have to look for a big old reversal candle like there, where you get the washout and then the follow through the next day and then a reversal. So before I look at any kind of support, I got to wait for that. So the other thing, though, is the more rounding tops, not a spike top, the more rounding tops, the more likely it's support. And sure enough, 2,200 held support in 2020. So if you did that, where's the support now? Right here, 3,200. That's where you have all that support, all that schmutz in this area. So as you see, maybe 3,500. So you see those prior, that was a lot of congestion. So I just want to tell you, it's a real dangerous time to try to pick bottoms. So that's what I'm doing right now is I'm looking for short ideas. Got to look for short ideas today. I got to look for short ideas because of the instability. I know I'm being a broken record about that, but nobody in the right mind wants to be long over the weekend, especially if the banks aren't going up. So, I mean, definitely keep that in mind, and they're not. The banks are what led on the upside. And once you see about receivership, everybody is going to be spooked. That doesn't mean to short the world. It means to short rallies. So now you're probably going to get an overbought, a oversold rally. And then I'm going to look for what won't go up. So once you hear about the receivership, you got to change and just go into what's going to work. And I wouldn't be surprised to see a rally back to the moving average. So all we're doing right now is we're bouncing in that zone. So I'll take the non-24-hour SPX. So right now what we're doing is bouncing in this zone. Right there. Right at this thing. Right where the yearly low, where you started the year, you're bouncing in there. And then on a shorter term chart, you have this. So you got this bounce. And now you see the repercussions of if this doesn't hold. That's a rectangle, could go down by 40 points. So just keep this in the back of your mind. It's really scary. Doesn't mean you can't go up temporarily, but I'm just telling you, this is something I'd watch for the rest of the day. And that's what I'm going to be doing. If JP Morgan can get back up here, sure, you might be able to have a rally. But like I said, the more money to be made today is on the way down, unless something else comes out, like they're going to let, you know, people get their money out, which they're not. So, thanks, Count, for putting that in there. So, I appreciate that. And calendars, I'm telling you, the only way I play calendars, well, I'll show you. Some of the calendars, the problem is that you get the volatility curve to be all screwed up. So people think there's more of an event that's going to happen between now and, let's say, July, and then it'll settle down. So a lot of times the volatility go up, but the Julys will go up higher than the Octobers, and you won't make money on a calendar. The other thing about calendars, I can't stress it enough, is they're directional. So if you buy a put calendar, you definitely want the markets to go down, and you don't want them to have a slow grind up like this. Now, then you'll get killed on your calendar because you'll be wrong on direction, and the one you're long will just die. So I bet if we go into SPX and we go to, let's say, July. So here you go. July is 25. So usually the farther out you go, the volatility is higher. There's more things can happen. So there's your July. And then look what happens when you go into October. That's usually a real strong time. I mean, real volatile, and it's the same. So the volatility didn't widen between the two strikes. So, just keep that in mind. That's what I'm watching, that they didn't widen. So what you want is a volatility of a farther out to go up more, but they're just not. So, I mean, it's not a bad idea, but they're not working yet. Let's just put it this way. They're just not working. In fact, all right, I have a butterfly on. I mean, a calendar on. I'm not going to go into which one, but it's farther out. So for 2 days, I've been dead right. I've been dead right on 4 points of the VIX, and today it's down money. And it's just incredible. So if you ever do one, you could go way out, like a 2,500 calendar, because it gives you a lot of bang for the buck and they're cheap. But yeah, it's not a bad idea. It's just, I don't know. You'd like to see a rally, but is this the worst it's going to be? To me, what's happening is the uncertainty. So here you go with your oversold rally, sort of. I wouldn't call that much of one, but it's getting there. So now it's probably stuck in this area all day. So, but at the very end of the day, yeah, I'm going to probably play. Well, I'll see if I have 3 reasons. And then I want to mess around on the short side. So right now, I don't have 3 reasons to do anything yet. And like I said, and it finally happened. It sounds silly, but if you're going for bonds and you're going for gold, it sounds silly, but it seems like if the dollar goes down enough, you got to go for oil. So that doesn't mean I don't know how they would own it, but yeah, there goes oil. So very interesting in here. If all of a sudden you saw the bonds only down like 130, I mean, only up 130, well, maybe some of the stress is gone. But with this, I'm going to look for shorts at the end of the day. I'm just not sure which ones. And by the way, Will, yeah, I'm believe it or not, I have a dead right calendar, dead perfect calendar, and it's I'm up $30. That's it. I mean, it's so frustrating. But when we talk about far out things, we're talking about maybe like a SPX 2000 fly. Sometimes they're like $3, and percentage wise, you can make some money on them. So something like that. And that would protect you from a black swan event, especially if it's soon. So I'm just saying, I'm not going to post any trades, but I'm just telling you that some of these are ridiculous, where you could go into and I'm not saying to do this because I'm not doing this, but I got to show you because this would be a black swan event. There. Why on earth would anybody do that? But in a black swan event, maybe it goes to 6. I'm not saying to buy it. I haven't done it. I'm just giving you an example. So there, but that would be a big black swan event. If you're up 75% in the calendar, that means you did a real more aggressive one. And then you have to worry about, are you going to be too right? And it goes under your strikes. So that's a tough one. So that's always the worst nightmare when you're dead right and you lose money. Now I'm watching some of the stuff. You see, if I can't fit KRE on the chart, that's not the most beautiful thing in the world. In fact, look at this. Wow. So I know in hindsight it filled the gap. That's all fine. The point is, if you were trying to buy the market and you were keying off the regional bank index, you got to be out right here. So you had 3 reasons. You had the SPY crossing, you had the KRE crossing, and you had the overbought condition. And for a kicker, the advanced decline wouldn't go up. So you had a number of reasons. So what am I going to do on the close? Tough call or put, because let's say I want to get short, but I don't want to get short yet. So do you do something now? And that's always the scary thing because it's expiration. So I haven't decided yet. Now, yesterday, pretty wild story. I screwed up on one, did well on another, but we had a butterfly in the QQQ, and I bought back the 93 puts for 2 cents. And everybody's like, why would you buy back the middle strike? I'm like, one of those just in case trades. And they closed at like $1. I didn't buy them to open, I bought them to close. But it just goes to show you, like, now, do I go for the 285s? No. But I'm just telling you, that's the kind of stuff that in a black swan, it's interesting to buy some of those like at 1 o'clock. So just to let you know. Well, in a normal scenario, it just, if they rallied that much on let's say Powell stop tightening, sure, that's different. But this is a lot different because of the instability factor. So that's why it's extremely dangerous. So usually probably I'm going to try to play something on the close, betting on these breaking down. See the possible bear flags? And you see the bonds near their high and the gold near their high. This doesn't give you warm fuzzies that this is going to hold. But you have all that support. So I'm just going to be trading actively, trading a lot of end of day stuff. Yeah, normally you're right. In fact, yesterday I messed up, Dirty Dog, because I was doing a session on how to, I put in my trades and I saw the bonds rally. So I got out of my QQQ puts and I didn't know why they rallied. And then when I saw the NASDAQ continue down, I'm like, uh-oh. So yeah, I mean, but yeah, normally you're right. Yeah, that was a good one. So, Will, I'm just a little pissed off at you that you didn't tell me about it. No, that was a good one. But you're right. You did the way out of the money. That's the way to do it. You're right. So I'm kidding about getting mad, by the way. That's trader humor. So, but that was great. So now, um, I don't know the answer for you, but it's, I don't see what would make the markets go up unless somebody private equity comes in at the last minute and buys it. So, end of day trades on an instability day, I'm looking at outright calls or puts. So, not, what happens if somebody private equity comes to the rescue? Yeah, this will be 39.50 in a second. So, no way I'm doing any kind of credit spreads. And then on the other hand, if the ES goes down fast, it could be down 80. So it's very much in flux still. And as you see, JP Morgan is probing the depths of despair, which was right in that 131 level. Let me just show you. So once it got over this ATR trailing stop before the rest, that sort of put a bid in the markets right there. So now it's trying to go back to that. So if this fails under here, yeah, I think all heck's going to break loose on the downside. So, which it isn't yet. It's got a gallant effort to hold. So take care, and I will talk to you later. Thanks for being with me.